We certainly thank everybody for taking the time to join us today. And really what we are here to talk about is what makes up a healthy relationship, banking relationship, pre and post SVB. And we say pre and post SVB deliberately because SVB is just a point in time. And these are important questions that we should all be thinking about today as well as yesterday. Some brief housekeeping. The slides from today's show will be available and emailed to all attendees. We will also be posting the recording of this session on the internet at the end of the day. So please, as you ask questions and answers, keep in mind that the whole session will be recorded and posted on the internet. While we will have probably 20, 25 minutes of prepared remarks, there will be plenty of time for your Q&A, and we have Kate and Ali on standby as moderators, and you'll be able to either raise your hand and ask your question verbally or put it in the text. And for some legal jargon, we are going to be advising you of different resources on this webinar. And while we hopefully these will be helpful to the entrepreneurial community, we are not specifically endorsing any one of these resources, and it's up to you to take the information and use them to your own advantage. I'm Kassar, founder and CEO of Multifunding since 2010. We've been helping business owners and entrepreneurs get their best possible loans to help them with their growth plans. I'm excited to have two guests with me today, Eric Buchenmeier and Tom Smith. Eric is the managing director at IntraFi. And Eric, why don't you just take a quick minute and say hello and tell everyone who you are and where you're from.
Ami, thank you. So I'm Eric Buchenmeier, a managing director at IntraFi. I hail out of Richmond, Virginia. I've been working with IntraFi for the last 17 years out of our previous 20 years of existence. Very happy to be here and appreciate the opportunity.
Tom Smith, please say hello.
Hi, thank you, Ami. Tom Smith, first Vice President of Commercial Banking for First Internet Bank, Indianapolis kid, born and raised, lived here my whole life, and been in the industry for 30 years. I've been with First Internet Bank for 11. And very happy to be here today.
Thank you so much. Thank you, everyone, for joining us. I want to be clear about what today is about and what it's not about. We're not here to talk about the economy. The economy is confusing and bumpy. It's very hard to predict what's going to happen, what's next, and will interest rates go up, will interest rates go down, will we be in a recession or not? Really, the answer is nobody yet knows. That's not what this is about. And especially in a bumpy economy, it's important to have a healthy relationship with a bank. And so I want to take a minute and put the current banking crisis, and deliberately I put banking crisis in parentheses, into context. 3 banks in the US out of 4,703 insured institutions have failed. Let's keep that in mind, 3 out of 4,703. Entrepreneurs need a healthy banking ecosystem to thrive. We have a little typo there. It should be thrive, not thrive, and survive. Banks are a critical part of how we survive and how we manage. The 25 largest US banks today, according to call report data as of December 31st, 2022, control 63% of all deposits. Banks leverage deposits to lend, and 63% of all deposits in the US as of December 31st, 2022, sit with the 25 largest US banks in the country. Yet, these same banks are not necessarily small business and entrepreneur friendly. They control 63% of all deposits, but only make 28% of all small business loans and 20% of all small business loans greater than $100,000, and only make 13% of all SBA loans. So the banks that everyone seems to think are the safe haven and the better place to go are actually not doing their share to help the business owners and entrepreneurs. Friends, we do not want the banking industry to become like the airline industry. If all the deposits move to the much bigger banks and there's massive consolidation in the industry, we will see an industry similar like the airline industry, where there are only maybe half a dozen choices, and customer service will become very similar and very difficult for business owners and entrepreneurs to get the individual and personalized attention we need in our banking relationships. In the last few weeks, smaller banks lost in aggregate 1.84% of all their deposits to the bigger banks. This is not a good trend for small businesses and entrepreneurs. Our advice to everybody, slow down and take a deep breath. Put it into context. The most important question here is, do you have a healthy relationship with a healthy bank or credit union? This is something that has to be considered. I'm going to inform everyone about two resources online where you can go and check in on the health of your institution: Weiss Financial Ratings and Barr Financial. These tools allow you, they take all the data that the banks and the credit unions have to report, and they put it into information that's much easier for the average consumer to understand, to check in on the health of your institution. Barr Financial will give your bank or institution a rating, 5, 4, 3.5, etc., down, down, down. And you can see, check in on the financial health of your institution. If you want more information, you can certainly get it. This is pay to play, but they will give you more detailed reports on your particular institution, is available on Barr.com if you want it. Another resource, and it might be helpful to check too, is to go to WiseRatings.com. That gives every bank in the country and credit union a grade, A to F. You can see that while some banks have A, most banks have Bs. And really, probably you should be more concerned if your bank has a C, a D, or an F. If you choose to, and this information on Weiss Ratings under the banking category is all free, you will be able to actually dig into your bank and check out the different issues that they use to evaluate the capitalization, the asset quality, the profitability, the liquidity, stability, all these different elements that go into the banking reports. So there are, in fact, resources where you can go online and chat on the financial stability of your institution. I encourage everyone to make informed decisions with data. Don't go with the hysteria and the masses. Keep in mind, what do we use banks for? Why are they important to us? They are important to us for deposits and treasury management and loans and liquidity that we often need to grow our businesses. I start to see some popping up in the chat, the Q&A, which is great. Just to keep in mind, we are going to hold all the questions to the end, and then we promise you we will get to all your questions. Keep in mind that if through your business you have deposits under $250,000, this money is fully insured by the U.S. government and will be available to you within hours of a shutdown. The question is, or the concern is, if you have money greater than $250,000. If you have multiple personal accounts with greater than $250K, these can be set up with different beneficiaries to increase insurance. And for banking accounts, sweep networks such as IntraFi are available. And that's why we're very happy to have Eric Buckenheimer to explain to us just how all that works. Eric, the floor is yours.
Thank you so much. So this next section or next discussion will be talking about the ease and convenience it is to gain greater levels of FDIC insurance coverage using products such as ICS and CEDARS. So certainly, for all the right reasons, safety is at the top of mind of many of entrepreneurs and other business owners. Ever since the SVB collapse and a couple other banks wobbles, you're seeing these headlines, and you're right to be concerned about FDIC insurance coverage. It's important. So there are some solutions, and the solutions of CEDARS and ICS are the solutions made available by nearly 3,000 banks. Basically, half the banking universe offers access to CEDARS and ICS. So ICS, which is the IntraFi Cash Sweep, that is used by customers who demand a high degree of liquidity. They want daily access to their funds, coupled with the convenience of working with a single institution and full FDIC insurance coverage on their deposits up to multiple millions. We also have the Cedars option, which is a CD option. So where ICS is the liquid offering using deposit accounts and money market accounts, Cedars uses CDs. So your investment dollars that seek a fixed term, fixed rate might find their way into Cedars, where they can gain access to greater levels of FDIC insurance coverage, and your operating account might be housed in an ICS where you have daily liquidity. So let's talk about how ICS and Cedars work exactly. So when you make a large dollar deposit at your local community bank, they place that into the IntraFi network. The IntraFi network will take that larger dollar deposit, divide it up into insurable sizes, sub 250, and place those funds at one of the other 3,000 banks that make up our network, always an FDIC insured institution. So essentially what Cedars and ICS is doing for you is what you used to do for yourself. Rather than you spread your money out among a multitude of banks, you now can bank at the local community bank that you know and trust, have them put their money into our network, and we will build you a portfolio of either money market accounts, checking accounts, or CDs. And because those funds are always in increments less than 250, you are always in an environment that is fully FDIC insured. So what you're getting here is you're getting the convenience of working with a local community bank, probably the bank that's issuing you credit facilities. At the same time, you're getting the benefit of diversification of your deposits among a multitude of banks and having every dollar eligible for full FDIC insurance coverage, up to multiple millions of dollars. Let's talk about the customer experience. It's rather quite simple. In order to gain access to these products, you simply sign a single agreement with the local community bank. It's called the Deposit Placement Agreement. At that moment, they will open up either a Cedars or ICS account for you. You fund your transactional account held at that bank. From the transactional account, the monies will flow into either Cedars or ICS, depending on where you direct your money to go. You will receive confirmation back from the bank that the money has flowed into ICS or the Cedars product. And then at the end of the month, you get a convenient monthly statement that tells you the exact condition of your Cedars portfolio of CDs or your ICS, your portfolio of checking accounts and or money market accounts. So rather than have a multitude of statements from a multitude of banks, you now have one consolidated statement from your local community bank. With the ICS, you have access to something called the Depositor Control Panel. So you, the depositor, can log on 24/7 and see the exact condition of your ICS account. You can see that you've got $92.3 million invested in ICS, and you can see where in the world your money has been placed. We'll tell you the name of the institution, their FDIC certification number, their city, state, and how much of your money is at that institution. And of course, the increment will always be an amount less than 250. Wonderful transparency. And this is just a sample. You know, each product, ICS and Cedars, has a month-end statement. And again, that just tells you the condition of your portfolio of CDs or your portfolio of checking accounts and or money market accounts. The ICS statement is a little less relevant in this situation because, again, you have access to the Depositor Control Panel, that website you can visit 24/7 to see the condition of your ICS account. And not most importantly, but an important aspect of these products is your information remains confidential. So even though other banks have a holding of your funds, they have no understanding of who you are, because your banking relationship is with the bank that you are banking with, that community bank. The fact that you have $246,000 at the Bank of Tulsa, we don't want the Bank of Tulsa to start soliciting you for additional banking services. It's not the Bank of Tulsa's relationship. You're just parking money there to achieve the FDIC insurance that you create.
Thank you so much. I appreciate it. One quick question for you. Who pays for this?
Yeah, so we IntraFi charge the bank a very small transaction fee. It's de minimis in this rising rate environment. And the bank, while they prefer not to pay that fee, they do pay it because they recognize the efficiency of using our products to attract larger dollar deposits. So there's no cost borne to the end user, the depositor.
Thank you so much. Now we want to turn the page a little bit. We've talked about the safety of your deposits, but the other question, which is an important question, is are you earning money on your deposits? In this new interest rate environment where money is worth something versus a year or two ago, it was very not really worth a whole lot. I want to turn the table to Tom Smith to talk about how you might think about earning interest on your deposit, a little bit about First Internet.
Yeah, thank you, Ami, and thank you everyone who is joined us today. I welcome the opportunity to talk to you. I'll briefly just give you a little background on First Internet Bank and then talk to you about some of the topics I think are important for business owners to have a healthy bank relationship. First Internet Bank was the first state-chartered FDIC insured institution to operate entirely online beginning in 1999. Ironically, just like the many business owners we have listening to us today, we were founded by someone I call a serial entrepreneur. He was a business owner, and so that entrepreneurial spirit is in our DNA. We understand the challenges that business owners face, and we try to be here for with solutions. Today, the bank offers a full range of personal and business banking products and services, from demand deposit accounts to commercial loans to lines of credit to SBA 7A lending nationwide. We're located just outside of Indianapolis, Indiana, and we're about $4.5 billion in asset size. As a digital bank, without branches, we offer more competitive interest rates typically, and with less fees for our deposit customers. And I think it's really important for folks to think about what you're earning on your accounts today. Ami, as you mentioned, the last few years, it's almost been de minimis. There's not been a lot of interest rate earnings because rates were so low. And I just would challenge people that are listening today to think about that and look at your own bank accounts and see what your bank's competition is offering. You need to try to maximize those earnings. For a very long time, we just kind of set it and forgot about it. And I think it's a good time. It's a refresher for people to kind of think about that and look at what the competition is offering. You need to take time to review your accounts and consult with your banker on new options. There might be options out there that you don't even know exist, from money market accounts to savings accounts and other savings instruments. Your bank should also have creative products and services that save you time and money, which in many ways are as good as an interest rate that you would earn. Some examples of those products would be remote deposit scanner. When we rolled out selling remote deposit scanners 10, 12, 13 years ago, we would get pushback, but not typically from the business owner. It was usually from the office manager or the controller. And their complaint was that was their time to go to Starbucks and get a cigarette break, right? So once we kind of got people used to this, they don't want to go to banking centers. They don't want to go into branches. That is a huge savings of time. We also offer same-day ACH, which is a product that allows you to move money just like you could with a wire transfer, but without the wire transfer fees. In fact, at First Internet, because of our founder, his history of being an entrepreneur and a business owner, one of the things that really he couldn't stand was looking at his bank statement every month and seeing account analysis fees. Well, we've waived all of those. So you can do things like remote deposit capture and ACH and other services virtually with no fees. So we're trying, your bank should be offering those services and be competitive in regards to giving you the best possible fee structure. Finally, I'd say search for a bank that has partnerships that will increase your security. And what I mean by that is IntraFi is a perfect example of how we can increase a depositor's security and spread that FDIC insurance around. And not all banks do that. And they need to have partnerships with strategic partners that can offer things like that. I lied, I said finally, I have two more points, sorry. Does your banker have a relationship with you? Is it consultative? And what I mean by that is, don't always assume that when your banker calls you, they're just trying to sell you another product. Welcome their questioning of what's going on in your operations on on a regular basis. And think of that relationship much like you would think of a relationship with your attorney or your CPA, someone that's really a consultant and that you will offer valued advice. And now finally, I would say have a relationship with your bank and not just your banker. As Ami pointed out earlier, research how well the bank is performing, but also understand that you don't want to be tied to that one person if they were to leave, God forbid they retire or wherever, and you're left without knowing who anyone else is at the bank. So make deeper connections with people within your bank. And I think those things are probably very helpful for a business owner to understand. Banking isn't just a commodity, but also a trusted advisor.
Thank you so much for your insight. I really appreciate it. Now let's take a minute and think about the other side of the banking ledger, which is loans. And an important question is, what happens to your loans if your bank is taken over by the FDIC? Remember that possession is 99% of the law. So if you have a term loan with the bank and you have the money in your possession, well, you've got the money. You're still going to have to pay it back. You might land up paying it back to somebody else under the same terms. But if you have a term debt, the money is yours and protected. It's a little bit of trick here if you get to lines of credit and ABL facilities, and these accounts or these loans or lines can be shut down or suspended with a bank disruption. And this is something that you have to think about. With a few levers, your deposits are safe. But if you rely on a line, and not everyone does, but many businesses do, they rely on a line to run their business. The disruption in the line could cause more disruption. I'm going to just reinforce, and we've talked about a lot of it today, 5 components to a healthy banking relationship. Not necessarily in this order, but they're all important. One is to have a relationship with a sound financial institution. Take the time and do your research. You can check Bauer or Weiss or other resources you find. If you're a real numbers geek, you can go to the FDIC and pull the call reports, but you can check in on the financial health of your institution. As Tom said, build relationships. It's important to have a relationship with your bank, not just with your business development officer, but with other people across the bank so that you know who to call in times of an emergency. 364 days a year, you probably will never need to talk to your bank. But when something happens, you need to talk to them. You want to know who to talk to and who to have a good relationship with. Be transparent. Businesses rarely go in a straight line. And our advice to people is, if you see troubled water for your business or uncertain or unexpected speed bumps, get ahead of the curve with your banker. Bankers love to hear about issues before they happen, not after they happen. If they hear about them before they happen, they can jump in and help. After they happen, they're caught off guard and they're not necessarily happy with you. Be in your bank's sweet spot. Sometimes we meet business owners or entrepreneurs who've outgrown their banks. If you're the biggest loan or one of the biggest loans on your bank's books, you're probably too big for them. And at the same time, you also want to be important to your bank. You want to matter to them. So if your bank is, or your account is just tiny or a speck for the bank, that's not a healthy thing either. Finally, ensure that you have access to credit through your bank. Lines of credit are important. They're like insurance. Be sure that you have the right access to credit through your bank you give your deposits to. These are prepared remarks today, and we wanted to leave plenty of time for questions. We're going to ask the moderators to help us. You can put your questions in the Q&A, or you can certainly raise your hand. And Kate and Allie will read the question to everybody, and then point the question to whoever the right person might be. Please feel free to ask any questions that you might have.
All right, so we do have a few questions to start out. We do have someone asking just to confirm and restate what rating sites that we used throughout this presentation. There was the Weiss.
Can you repeat the question, please?
Yeah. what rating sites did you use for this presentation?
The sites we found we leveraged were Bauer Financial and Weiss Ratings. There might be others. Those are two big ones. And certainly, if you want to do your own analysis, all the call report data on every bank is available on FDIC.gov, and you can go there and you can pull your data as well and do your own data.
All right. Given the current environment, are banks being more conservative with their lending and fundamentals?
You want to take that question?
Sorry, Ami, did you defer to me there? Yes. Yeah, obviously banks are, concerned with credit quality. They're trying to maintain a standard that they don't want to deviate from. But I can only tell you from my personal experience here with First Internet, we don't tend to have a knee-jerk reaction. We're not going to overcorrect and stop lending money to good, sound businesses. I don't feel like we're doing anything differently than we were a year ago or 2 years ago.
I think maybe to add to the element that what we find at multi-funding is we haven't seen banks tighten. What we have seen is because loans are more expensive. Cash flow loans. It might be tougher you might not be able to get quite as much as you would have a year ago because the payments have to make sense and the loan has to make sense and the money's more expensive.
All right, there are no further questions, but if anyone has any questions, please feel free to leave them in the question and answer section or in the chat. All right, we do have another question. One is asking, should my bank be charging me for a sweep account?
Yeah, I'll take a shot at that. So banks, of course, will charge the fees that they feel they need to be charged to compensate them for the service they provide. I do know that in ICS, banks are prohibited from passing on a fee. They are charged a fee, but they absorb that for the cash sweep that they provide in the ICS environment. But it could be, every relationship is different. It could be that you're getting other in-kind products or services from the bank to justify that sweep fee. But there is no such fee in the ICS environment.
I think there was a comment from John who asked that question up earlier saying that his local bank just quoted him $175 a month for having a sweep account and that it will yield 3% interest rate right now. Does that sound to you guys good, bad, about the same? Any thoughts?
Competition is a wonderful thing. So my products are in thousands of banks, and again, it's a relationship thing. If you're getting value for that fee, it makes sense. But you might be able to find a fully FDIC insured cash sweep product at another institution that's charging you nothing. But maybe they offer you a lower rate than 3%. Perhaps it's higher. Right now, we're seeing rates all across the board. I've seen a rate as high as 4.5. I've seen rates as low as 2.5, and everywhere in between. And you can obtain cash sweeps from a multitude of banks. I know First Internet Bank is in our network. They're very aggressive with their rate. And Tom, you'll have to tell me whether or not you charge a fee for the sweep.
Yeah, no, we like I said earlier, we waived all of our analysis fees. So it gets down to the fact of the matter is how competitive does your bank want to be for your deposits? It's a pretty competitive environment out there. So I would think that they probably want to sharpen their pencil a little bit and see if they can do better for you. Of course, I'm willing to talk to you.
Everyone else have any questions for us? Any thoughts, ideas? If you don't want to put it in text, you're also comfortable to raise your hand and you can speak your question. That's okay also. Opportunity for extra questions is going once, is going twice. Okay, well, we are going to give everybody some extra time in their day. We always try to keep these things short, sweet, and to the point and give you what you need. We will be sharing these slides with you. and certainly hope that we've given you valuable information, and feel free to reach out to us. Remember, stay